Okay, hey everyone, it's Mike Valtos, and welcome to the Orderflows Market Analysis for Friday, September 8th. And market was kind of quiet, I think, as everyone is sort of focusing on the impact of Hurricane Irma that's expected to reach landfall in Florida over the weekend. I think it's Sunday at 2 p.m. I saw. Anyway, the markets that's been rallying quite nicely for the week is gold. Gold's up 1.7% for the week, 1352. Equities kind of mixed. I think we had a small gain in the Dow, but for the week the Dow was down just under 1%. So let's take a look at some of these markets. There was some interesting things. Actually, I'm overseas right now, and the power went out here at about I think what time was it? Around, it was going off and on here. Because we also got a heavy storm in the Philippines right now, and being the third world, sometimes when there's very, very heavy rains, they shut down the power grid in case they don't want the lines to fall over and start fires and stuff like that. So around 11:30 p.m. last night, or sorry, 11:30 a.m. in Chicago time, I lost everything as far as data. I mean, my connection got cut off. Even the internet was down. So this will sort of be a morning recap because I don't have the afternoon data. But anyway, this presentation is for educational and informational purposes only. It should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that could be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Again, the tools I use in this presentation are the Orderflows Trader volume footprint chart, the Delta Scalper, which is a additional tool, and the Price Rejector, which is also an additional tool. Delta Scalper and Price Rejector are order flow tools to read the order flow and, basically help you in your trading decisions. Again, order flow is a bit complex when, for beginners, and it takes time. Honestly, it takes time. It's not something that's cut and dry. There's so many different facets of order flow that, for a beginner, it's going to take some time. But that's why I record these videos. That's why I make these videos, and that's why I have a course on order flow so that you can understand what you're looking at. You look at an order flow chart. This is an order flows chart right here, and to be honest, for the uninitiated, it's a bit confusing. You have numbers, a lot of numbers. People see numbers, get scared of numbers. Fear of numbers, but it's really very simple, right? The volume on the right hand side is the volume that trades on the offer. The volume traded on the left hand side is the volume traded on the bid. And without getting into a little bit more, I'll start talking about this. This is British pound. This is the 8 range chart. I like range charts as opposed to minute based charts, but I do look at minute based charts as well. But the reason why I prefer range based charts is because I like to see how price moves, from a level to a level, rather than, oh, it's 9:15, time to start a new bar, like that. So early on in the morning, British pound, you had the Delta Scalper gave you a sell, and then it came right back, 2 bars later with a buy. I'll say a nice buy, but you have a short opportunity here right off the high. This green line is the high, but then it comes right back. You got to buy very, very fast, within 2 bars, which is a bullish sign as well. And so now you're looking at it. Initially you were thinking, hey, this market can sell off, but then boom, you get a reversal sign here that this market is not selling off. In fact, you got aggressive buyers coming back up as you're coming into the high. What Delta does, it tells you the difference between net aggressive buyers and aggressive sellers. So is that important? Well, yeah, when you're at highs or lows, you want to know, is this high going to hold? Is this low going to hold? Or are we going to go higher or are we going to go lower? And if you're seeing signs up near the high of aggressive selling, like you saw here early, right off the high, you're thinking, hey, this market's going to sell off. But then lo and behold, what do you see? Again, you're up here, you see a lot of negative deltas from in here, right, which is bearish, right? Net aggressive selling up here at the high. But you know what? The Delta Scalper is reading all this delta, all these numbers here, this top line here, and it's telling you, hold on, this is possibly a fake out, and you're seeing aggressive buying starting to come back in. And if you're seeing aggressive buying come back in near a high, chances are, there's a good chance we can take out the high and potentially keep going higher. So our high here earlier was at 53. Delta Scalper gives you the buy signal. You take out the high, you got a divergence that fails. Next bar up here takes it out. So you should be looking to be getting long as you're taking out this high, at 54. and we keep trading up, up, up. You see aggressive buying. You see buying imbalances in these bars. Up, 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 more buying. Then you get up here, you have the Delta Scalper giving you a sell. This is, so you went from 50 down here, 131, 54, 53, to where you get your sell signal up here in the 90s. So you got another divergence here actually. So you got one divergence that failed here. Did you have any earlier? Not really. So you're looking at two failed divergences, but then you're getting this. Well, you don't know this one's failed yet. You're looking at this Delta Scalper. You got a divergence, thinking, hey, maybe this market's going to sell off. So you're long from 53, 54. You're trading up here, in the 90s, 80s, up in here. Maybe you take it off. Maybe you lighten it up, but then you got a sell signal here. So you should be out of that position. And then what does the market do? Comes right back up with a bullish bar. You got imbalance, 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 4 imbalances in the bar. You take out the high. You start seeing again aggressive buying come in with more buying imbalances. Boom, boom, boom. Start taking out the high. You get up here to 21, which is your new high. You got a divergence again, but again, that's at this time it's 6:56. Your first divergence was down here at 4 in the morning, 4:39. It's a bit long. I mean, yeah, when I see groupings of divergences that fail, I do think the market's going higher. But again, you had just a very big move already. You had basically a 50-point, 70-point move up here. To start thinking that, hey, we're going to still keep going higher. Yes, we can, and you see we do. We get up to 27. And then you start selling off. But again, when you're playing breakouts, right? You don't want to be playing breakouts after you just had a great breakout, right? Your breakout, the time to play it is down here, at 4 in the morning, ideally. Look for signs, not after you rally from 50 all the way up to 131.50 all the way up to 132.21. That's a 70 tick move. Don't be looking for breakouts up here, because that's not, you've already broken out, right? It'd be better if we have a reason to be buying a breakout up here, like maybe at 60 or at 70, or obviously somewhere down here right before the initial breakout, or right around the initial breakout, not after you broke out and moved 70 ticks. So we start coming off. You got your ratio and your divergence. Here's a 34.25. Here's your divergence, which is a bearish sign. You kind of go sideways over the next 45 minutes. Stack selling imbalance right in here, you could see, and you sell off a bit more down to the swing low. Then this is where my data stopped here. So that was the British pound. Let's look at Jap yen really quick here. Japanese yen was a bit interesting. There's some nice signals in the order flow with Delta Scalper and Price Rejector. Now, I'm not saying, I'm not necessarily one to say that, when you have Delta Scalper and Price Rejector, when you got like a confluence of things, it makes the signal stronger. No, I don't think it makes the signal stronger, but I do like it. It's not like I don't put +1, +1, +1, like when I have divergence, Delta Scalper, Price Rejector, and think, oh, this is 10 times stronger or 30 times stronger because you got, everything. No, I still like it. I just, I've seen them where you got everything aligned up and then the trade fails. Again, I don't think it, personally, I don't add any extra, what do you call it, power, so to speak, to the move. Rather, I still like the move. So this is at 3 in the morning, and you're high here in the Jap yen. You got a divergence, you got the negative delta, you got the Price Rejector, you've got the Delta Scalper, and this is what, around 92.80 down here. Next bar you're getting short around, oh, sorry, not 92.80, I can't read, 92.97, 92.95, and this next bar is probably where you're getting short. Trades all the way down to 85. This is where you get the next signal. This is the U-turn giving you a buy signal. You start rallying back up. You have a stack buying imbalance here just below the high. Honestly, I prefer the stack buying imbalances on the other side of the high, not going up into the high, but that's just me. Then you get up here again, you got a divergence, no ratio. Next bar you got the ratio. You sell off, not a big sell off, about 10 ticks. then you just kind of go sideways. Here you got the delta scalper giving you a sell. Unfortunately, it doesn't work out. It makes a new high up here. Again, you got a ratio and a divergence. Do you sell off? Over the next, this is what time, 6:06. Over the next hour, you're sort of going sideways here before you start rallying back up. Now, you know, you're getting short here, right, at 13. And then over the next hour, you're still trading right around there. You know, that's not a good sign that this trade is going to work out. Yeah, it might. But again, you know, you should have a time stop. Think in terms of time. Because, you know, one, it's eating up your capital. I'll say eating it up in the terms of, you know, you've got a position on. It's going nowhere. You're not getting paid. And two, it's eating up your mental thoughts. You know, you're thinking you're in this trade. It's going nowhere. You're sitting there going back and forth. What do I do? What do I do? And you're not looking at other markets, other opportunities that are presenting themselves because you're sort of stuck in this position, right? It's like being in a bad relationship. You know, being in a relationship that's going nowhere. You know, it's not going to lead to marriage. You don't want to break up. It's just one of these things going sideways. You know, eventually you got to pull the plug. And, you know, this, you know, a position like this is the same thing. You got point of controls, 1, 2, you know, 3, 4. These are right around the same level. So, you know, you're just going sideways here. You know, get out and let the market tell you, you know, what you should do. Now you get up here, you got a new high. You've got a divergence, not a ratio. It's borderline, actually. It's 27.67. I like 28. You know, the market sells off this high. You know, point of control also up near the top of the bar. It's in the second slot. You can see here you got the POC trader, this aqua line, giving you that sign that, hey, you know, there's some resistance up there. And, you know, in this market, now it made the nice move lower. You know, down. You know, under pressure all day. Here's the delta scalper that failed. Here was a nice little signal with the red arrow in this bar. You know, this is a unique indicator, unique to Orderflows Trader. Tells you trap traders up here in the top of this bar, and you see over the next couple of bars it sells off. Now when you're dealing with trap traders, right, trap traders is going to be more of a short-term move. Don't look for trap traders to be a long-term move, thinking like, oh, I had trap traders here, and then you're holding a position for, you know, 30 minutes. No, you have trap traders. You know, the reason why they're called trap traders is because they're stuck in a position that's not working out. So the people that bought as you're going up here, you know, going up here thinking we're going to break out. I mean, look at this volume up in here, you know, 205, 158, 170, 140. You're coming up here, and, you know, these guys, everyone that was piling in here, buying it, all of a sudden they're stuck. So what do they got to do? You know, they're going to sell. They're not going to sell an hour later. When you're thinking of trap traders, it's people that are long and wrong in this case. They're going to get out sooner rather than later. You know, trap traders are more of, you know, the short-term scalper type traders that you know, are buying it and they realize they're wrong and they get out really fast. It's not people that are buying it, you know, and they've got, you know, 50-point stops. You know, they're buying it. They are people that got very tight stops, and as soon as they realize the trade's not working out, they get out. Here's a delta scalper that failed. There's no other way to put it. And we sell off. We get down here. Yeah, not really much in there to talk about in the order flow. Then you get up into this area up here on 925. You get this big doji bar up here on the top. All the candlestick. Oh, you got a doji bar there. You're supposed to sell. You know, even though they, you know, they don't tell you that. You know, they tell you after the fact. You know, they don't tell you that. Oh, it's a sign of market indecision. You know, and you can stop there and still go higher. But anyway, you know, with the order flow, it's a little bit more clear. You got stacked selling imbalances in here. Next bar is up, but then the next bar again, more selling coming in. So you know, just by looking at this market's going to fall over. And what does it do? It falls over. It trades down from, you know, 73, 74 area, right down, directly down into the 60s, and you're just sort of hanging around here. You've got what is that? Point of control trader here giving you the buy signal. You got ratio bounds low, point of control on the bottom. You rally up here to the price rejector. Again, trap traders, sign you have trap traders. You got this move up. I mean, look at this volume up here, 194, 109, 182. The next bar down. You know, again, if you're a short-term trader, like trying to get the next few ticks, you know, trap traders is something that, you know, you should look into. And then you just sort of go sideways and then start working your way back up here. This is around where my data ended for the day. I don't know what else happened the rest of this day. But anyway, that was the Japanese yen. Okay, let's take a look at equities. Even though equities ended mixed for the day, there were still some moves. Really quick on the 10 range S&P chart. This is the low here at 649. Here you got the price rejector giving you a buy signal. And, over the next couple hours, this is 649 until 843, 2 hours later. It's just kind of going spinning its wheels before it makes the move up. But again, if you're trading a 10 range chart, your outlook is going to be a lot longer than, say, you're trading a 4 range chart. So, you can take it an hour or two in a 10 range, whereas in a 4 range, you shouldn't be holding a position for an hour, because it's a faster moving chart. Then you get the price rejector here. Doesn't so you get your price rejector from your low down in here. So you're buying around 57 something, and then price rejector up here. So maybe you're selling it around 60. This one fails. The sell fails. But anyway, I said my data just goes up to this one bar here. So I'll take a look at the 4 range. It's probably a little bit more revealing. There's some interesting things we can talk about in the 4 range. If I can find it here. Oops. Just bear with me here. It's like can't find the chart when you need it. What? Oh man, I hope I didn't close it down, but otherwise. Tell me I closed it. Yeah, quite upset. But anyway, it's rollover week started in Emini, so you should be looking at December, not September, in case you haven't updated your charts. Just I want to get that out there for you guys. But again, so 609, this was that low here. You can see the price rejector. Price rejector works best on lows and highs, not necessarily in the middle of trading. Like this one here is, we're not on our low, we're off our low still. But when it appears right on the low and the high, it's quite powerful. So here you got it on the low of the day. You got a divergence, no ratio. Next bar you got the ratio you like, and you get a nice move. So even if you're not convinced with this price rejector here, next bar you got the ratio and the divergence. So say you're getting long around 57, 57 and a half, it makes a move up to 59, 59 and a half. This is a price rejector giving you a sell, and you sell off a bit. Get down here, point of control towards the bottom. Again, and you got a bullish ratio. You rally back up to a bar where you got point of control. That's this aqua line. It's telling me that there's a very useful point of control for trading. This one just sort of goes sideways. This bar here, I thought was going to be very bearish. I thought we were going to sell off this bar, but we didn't. Again, point of control up near the high. You got these imbalances here. You got some buying here that you couldn't follow through. You got buying and balance, buying and balance, buying and balance, and you didn't follow through, and you came right back really quick. Made a new high up here. Again, prominent point of control up here, and we sort of held that one and started working our way back down. Here you got a stacked imbalance that you just went sideways on. Again, I say, by the time you get to the third bar, if you're still hanging around that imbalance area, it's probably not going to be very effective. Fourth bar, we get on the other side of it. Fifth bar, still there. And in this case, it just kept going sideways and then, went higher. I mean, I think it was yesterday there was one where you had that imbalance. You're just hanging around, and then you sold off. But, really, it's losing its effectiveness as time goes on. This is 939, you got aggressive sellers, but by the end of the bar, look, you've got buying imbalances creeping in, 2952, 463. So to still be short off these aggressive sellers is pointless, right? Because now you got aggressive buying coming in. And then you go higher, higher, higher. Here you get, you rally back up to unchanged, not unchanged, but the open of the day, which is close to unchanged. Delta scalper gives you a sell. You sell off a little bit. You get down here. Delta scalper gives you a buy, and that's where my chart ended, unfortunately. Real quick, we'll take a look at Minidow YM. Also, I look at an 8 range on the Minidow. Let me just pull it up here somewhere. Make sure I got the right chart. Here it is. This is the 8 range Minidow. And again, same things I always talk about. You got your divergence, you got your ratio. Hey, what happened to my chart? Divergence and ratio afterwards. And, you make a decent rally from, the 90 area up into the teens. Then, where are we here? Point of control, up here. This one just goes sideways. Okay, then we start rallying. Get up here, you got divergence, but that's it. Price rejector here, we sell off from this high, get the price rejector here. Rally back up to a useful point of control up here, that's this aqua line. Sell off a little bit, and you start running into these highs here. So you got the divergence there. This is the Delta scalper, in case you're wondering what this is. This this green line. But look, you got divergence. Here you got just a ratio by itself, which isn't very useful. I do look for pullbacks towards that ratio. There's actually a trade setup I have. I look for, when you have just a ratio at a high or a low, look for a pullback, and then towards that high, look to get short and just take so even if you did that, you're getting short at 90, you got to move down to 80, over the next 2 bars before you rally back up. But it's 909, you got a divergence. 939, 950. So within an hour, you've already got 3 divergences. You might want to be playing a breakout. You haven't had a big move yet. Just sort of stair-stepping here, stair-stepping. Then you break it out here. 10 o'clock. Do you get a move? Yeah, you go from 94 up to 10. So about a 15-point move before you get this divergence and the ratio again. Which is very powerful in and of itself. And so even if you got long here, you're in the breakout around 94, 90, 95, you're looking at this ratio and divergence. You should be covering it already in this bar. So maybe you broke even, maybe you made a couple of ticks. And then what happens? You sell off from, 800 all the way down and, below 80. And then you just sort of go sideways in here. Just really quick, I'll show you just a couple of charts with the Renko stuff. Again, I get a lot of people asking about Renko. Crude oil was a nice one. Oh, I'll talk about crude on a footprint chart in a second here. But crude, you had this nice sell signal up here from 49.05, 4900. It sells off almost $1. It gets all the way down here to 48.10 area where it starts going sideways. This was, if you're using our Renko chart, it's a $1 move, a $1 move there, early in the morning. But what I wanted to talk about was actually the Nasdaq one, if I could pull it up. Nasdaq, you had a bunch of signals, some winners, some losers. But I just gotta dig it up here for you. Bear with me. But that's a beautiful chart on the crude. Honestly, if you get 1 or 2 trades, say you get 2 trades and one's a $1 winner and one's a 5-cent loser, I'll take that. I'll take that every day. Unfortunately, it's not always like that. Now here's the Nasdaq Renko chart. So I'll just take it back again. Nasdaq, realistically, you should be looking to trade it after the cash open here at 8:30. Yeah, you got a trade here that worked out. One that didn't. This one, didn't. I got nothing before that. So what do you got? You got a nice little move here. This one fails. Then you get a nice move here, from the 47 area down into the 37 area. Then again, you have to sell. Then you get a buy here. Kind of works out a little bit, small winner. This one sideways and then pops up before selling off. And then down here, you're getting some buy signals. But again, can you take a small loss like this when you're getting you're losing basically 1 bar, but like here you're getting how many? 1, 2, 3, 4, 5, 6 bars. Here you're getting 10 bars. That's what you have to ask yourself in trading. Yeah, you're risking basically 1 bar, but if you're getting moves like this with 10 or 15 bars, 8 or 9 bars, that's what you want. You're risking 1 bar to get 8 or 9 back. Okay, let me see if I can find the crude oil footprint chart really quick. Okay. Let's make sure I got the right one with the indicators on them. I got a lot of crude charts open. Again, you know, crude is something I get a lot of questions on as well. Well, I'll just show you this one really quick. Some I got different indicators on. Not all of them have all the exact same things running on. But you know, the main ones are the delta scalper and the price rejector. You know, just really quick, this is the 987 tick chart in crude with the delta scalper. You got a nice move here. Again, you also captured that move here from 49 bucks down to 48.20, 48.30. So you got a nice little move here, nice little move back up, then a nice move down. That's the 987 tick chart. Delta scalper and price rejector do run on normal bar charts. Okay, I think this is the chart here that I'm looking for. That's got everything. I see price rejector. Well, they both do actually. So let me just walk it back a bit here earlier in the morning. Okay, so you know, what do you got? You got a divergence here. You got the price rejector in the next bar. Delta, sorry, this is not price rejector. This is delta scalper. This is the Voltos transition, this yellow thing, which is also bullish. You start rallying up here. Delta scalper gives you a sell. Yeah, here you got a stack buying imbalance. And unfortunately, this market just kind of going sideways here. And then you start selling off again. Whoops. Down into the new lows. You break through the low. You know, you notice you're not seeing any divergences yet here. You got one down here. This is around the 48.50 area. Got a nice stack selling imbalance just, you know, as you're breaking out. You know, that to me that's bearish. Again, I'd rather have the selling imbalance down here after you're on the other side of the low, rather than going into the low. That's me though. I mean, people can get into arguments that where is it better. I know from my own analysis that it's better down there. Yeah, here you got a failed divergence. Here you got another failed divergence. So again, you get 3 failed divergences relatively quick, although you already just had a move, right? It would look a lot better if you had a failed divergence here, or maybe one here, then one here, not as you go down from 48.60 all the way down to, you know, 48.16. You know, it's a 50-cent move. You get 3 failed divergences. Yeah, you can play it. I mean, I don't know how much of this move is left, honestly. Here you get a buy, the delta scalper coming in, and it just comes right back on you really quick. You know, so you break out that low, so you did, you know, take out the 3rd failed divergence. I mean, did you get a big move? Yeah, not really. You got about a 10-cent move. Then you just started going sideways, sideways, sideways. You get within a tick of the low here, you don't hit it. You know, you got a big stack buying imbalance coming in here at 10.11. Did it work out? Yeah, it kind of did. You know, it's on the right side, but this bar here, the 3rd bar, is not good. When you start coming back in on the 3rd bar and the 4th bar, you're on the other side. You know, it's not good. Yeah, I mean, yeah, at this point, how's it doing? It's a little bit higher. It's the 5th bar, but you know, you're looking for the move, and it should be happening within the first 3 bars, not, oh, it comes up and then sells off below the imbalance and then back up again. No, that's not what you want. Definitely not what you want. So anyway, thanks for watching this presentation. Be sure to subscribe to our YouTube channel. And you know, if you want to learn more about order flows and the order flows software, visit orderflows.com. And if you want to learn more about the delta scalper, go to deltascalper.com. You know, that's what you want to do. And be sure to subscribe to my YouTube channel. You know, I try to get these channels updated every day, you know, with a video or 2. Some days I get 2 up there. And you know, it'll help your learning in trading. So I got something else coming out later this weekend, hopefully. So stay tuned and subscribe to my channel, guys. Thanks, and have a great weekend.